Jerome Powell is at it again in what seems like him being disruptive on purpose. I'll break it down next. If you get some value out of this or you like what you hear, make sure to subscribe to the channel, hit on the bell for notifications, and if you want to schedule a call with our team, you can do that with the link in the comments. Last week, the Fed met. They adjusted the federal funds rate by 25 basis points, widely expected. I would have liked to have seen more. One of the Fed governors would have liked to seen more. We'll break that down in a second here. And this was predicted. This was priced into mortgage rates. We saw mortgage rates last week hit their lowest level in 3 years. And then Jerome Powell decided to open his mouth. And he went about his normal playbook, which is saying comments that get people nervous. To you exactly what he said here. At the post-meeting statement, it offered some clues about the FOMC, the Federal Open Market Committee, would take in its December meeting. That's in 40 days. And he said, and was really clear, that further reductions were not a foregone conclusion. In the committee's discussions at the meeting, according to Powell, this is what he said, there were strongly differing views on how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion, far from it. And then you look at the CME group, right? And these are predictors of what's going to happen next. 40 days is a long time. A lot can happen between now and the next meeting. Currently, we're sitting at a 72.8% chance we're going to see another 25 basis point decrease, as was predicted and almost scheduled or foreshadowed by Jerome Powell and the Fed at their August retreat in Jackson Hole. So a lot of people are expecting this, that we're going to see 2 more rate cuts. We got one. Are we going to get the second? Are they going to finish the job? So the decision was a 10-2 vote to go 25 basis points less. The newly appointed Governor Stephen Miron, he wanted to go 50 basis points, which I think would have been a great move. And Kansas City President Jeremy Schmidt dissented in support of no rate cut at all. And Powell said there's a growing chorus to wait at least one cycle before making another cut. And the Dow Jones closed, down 74 points after the announcement. So if you look at the 30-year fixed rate, the end of last week, that was getting into the 6.33% range after being at like 6.13 earlier in the week. So 0.2 of a percentage point is not insignificant. And what's disappointing here is he didn't need to say this. One of the problems we have right now is the government shutdown. They can't get actual data. And the Federal Reserve apparently is monitoring shifts in employment landscape very, very carefully following recent layoffs at large U.S. companies. And that's another thing Jerome Powell pointed out. We saw inflation came in around 3% at the latest reading, and that was below expectations, still up a little bit, but at a good number. So, the question is, what does this mean? And when you look at what a lot of experts are saying is that, Powell has a tendency to shoot his mouth off after the meetings are done. They do one thing, he says something else. This is documented. And the market reacts. The market reacts to the comments, which is unfortunate. So, what is happening here in the early analysis, according to Housing Wire, is that we have the lowest benchmark interest rate in 3 years after this 25 basis point cut. And that could lower mortgage rates further, but his comments caused them to jump up. So the market would have reacted a little differently had he not said all this. So here's what you want to monitor here moving forward. I'd be looking at inflation readings, and I'd be looking at what's going on with unemployment and the jobs numbers, because that's what the Fed is monitoring. And ultimately, those are going to be what determines whether or not we see a December rate cut. Now, it'd be great if the government got their act together and were able to stop this shutdown so we could have meaningful data come out. We're not there yet. So what does all this mean for buyers and sellers? That's probably the big question. Now that I've gone on my rant about what should or shouldn't be said after these meetings. And for sellers and buyers, I would proceed with your best interest in mind. If you're a seller and you're planning to move because of a reason that makes sense for your life, that's why you want to proceed. And the same thing for buyers. It's going to be impossible to time when rates are coming down. It's not going to happen. You would think a 25 basis point cut would cause rates to move more favorably. That didn't happen because of these comments by Jerome Powell. So instead of focusing on what the Fed is or isn't doing, I'd be looking at the following if I'm a home seller. Do I have a place to go, and what's my current time frame? And if you can answer both those questions, then it might make sense to put your home on the market, because we're still seeing relatively low inventory in the greater Philadelphia area. We're at a 2.39 month supply of homes on the market right now, and that's very seller friendly. And if I'm a buyer right now, even though rates jumped up a little bit, there's ways to buy down the rate, talk to a great lender. There's ways to lock in a lower rate. You can talk to a great lender. And what I'd be looking at if I'm a buyer is, can I live in the home the next 5 years? Does the payment make sense? And does the house work for me? And that's what you want to be evaluating. What's best for you? What's best for your situation? Because we're probably going to get more of this with the Federal Reserve. Looks like they're maybe playing politics a little bit and saying things that are causing the market to react. It's unfortunate. It's the reality. Think about what's best for you. Understand what the local market's like, because the greater Philadelphia area is different than Florida, Texas, California, all these other places, New York. They got a whole lot of stuff going on up there. And understand your best move. That's the best advice in light of all this. I would imagine rates will calm down in the coming weeks leading up to the December meeting because of the economic indicators, and rates could come back down. A lot of people are predicting we're going to see like 5.9% by the end of the year. That's according to Fannie Mae. So rates do like that. They're slowly trending down. But the reality is, if you find the right home and the payment makes sense, that's when you want to make a move as a buyer. And as a seller, if you've got a place to go and the timing makes sense, there's some pretty seller-friendly conditions in the market you may want to think about taking advantage of. And that's all the more reason to talk to a professional.